Good morning. It's 9 a.m. in Greater China. I'm David Ingles. You're watching the China Show coming to you live from the Bloomberg Invest here in Hong Kong. Policymakers and industry executives are joining us to discuss the future of the financial hub as it navigates this geopolitical turmoil, of course, and heightened regulation from Beijing. We'll have a lot of conversations coming through over the next few hours, including some exclusives with the Hong Kong Financial Secretary Paul Chan and Hong Kong Exchange's CEO Bonnie Chan. Have a look on your screens as well. CFOs of Lenovo and Baidu are also joining us over the course of today, really as Beijing prepares to spend close to $300 billion to build out its AI data centers across the region. Also discussing markets with major asset managers in public and private markets amidst, of course, this flare-up in violence in the Middle East. Right, welcome to the show. Hope you're all well. Lots to get through over the next 2 hours or so. We're just about to get started here, of course, on the ground at Bloomberg Invest, Hong Kong. Things kick off in about 30 minutes from now with, of course, some welcome remarks. And the reason why I am sitting alone here right now is my co-anchor, of course, Yvonne Man, is standing by inside for that exclusive conversation with Paul Chan in about 30 minutes from now. Right. We'll also get you caught up with some breaking news right now as it pertains to what's happening over in the Middle East. The two things here. Number one, and this one just crossing the terminal over the last few minutes or so. So the U.S. has completed its strikes in response to Iran's helicopter attack. The details so far, not a lot. We know a little bit about what's happened, though, just to put a caveat that. So they did strike some sites near the Strait of Hormuz. In terms of the assets that were targeted, Iranian air defense and ground control stations. Now, before that, in a few minutes before those headlines drop, let me just take you through the other side of the conversation here, that Iran has launched a drone strike on the U.S. Fifth Fleet in Bahrain. So those two things are happening simultaneously. Brent on your screens, slightly to the upside with a 92 handle right now. In fact, let's get a better sense and context here of markets, direction of travel, and everything in between. Avril Hong is with us in Singapore to get us up to speed on markets. Avril.
Yeah, Dave, I mean, it was really about the U.S. talking about self-defense striking Iran, and this is following on from the attack on the U.S. helicopter. So we actually saw Brent spiking a little bit, but just as soon as we saw those headlines dropping about the U.S. completing its strikes on Iran, Brent has reversed a lot of those gains. You're sitting away from the session highs of about 93.20. You're also looking out for, of course, the signs of this demand destruction in China, the rest of Asia as well. That's something that has been feeding into the data. And of course, that is against a backdrop of traders watching out for US CPI after the surprisingly strong jobs report last week. We're going to be watching out for the extent in which the Middle East conflict has been showing up in pricing pressure in the US. We already know how some traders have been putting in more hawkish protection, and some are positioning for a hike as soon as September. Of course, in terms of stocks, overnight in the US, we ended quite mixed. There was a lot of volatility in the chip makers. It's also about this continued risk management that we've been seeing in the past couple of sessions. So yesterday's rebound initially, that didn't last very long and towards the end of the session. In Asia, we are taking a look, of course, at the Kospi, that bellwether of the risk appetite. We've been seeing those swings the past two sessions, 8% up and down. Today, you're trending lower given the handover that we got from the US. Still those questions about the IPO pipeline and where the money is going to come from as we watch for those three big US IPOs. In China, watching PPI, CPI data as well. But the yuan and the advance, given the really promising trade numbers out of China. Watching the telcos and the chip makers, given this package that we've gotten news of, that suggestion that there could be 2 trillion yuan that's going to be pumped into the AI infrastructure build out. So we'll watch those movers as well in this session. Dave?
Right. Avril, thank you for that. Yeah, let's get more details on what's taking place right now with all the breaking news there in the Middle East. Jill Deesis joins us right now, our managing editor. Jill, get us up to speed, the context into the last few minutes, and what do we know about the last few minutes?
Yes, David. So what we've just seen is that U.S. Central Command has essentially put out a statement saying that these retaliatory strikes have been completed. So remember, these are strikes that the U.S. says were in response to the shooting down of a U.S. Army helicopter. No soldiers were hurt in that incident, but Trump has blamed Iran for that event and so has framed this latest round of strikes that the U.S. has made on Iran as a retaliation. The takeaway here from this latest U.S. Central Command statement is that the U.S. is trying to portray this as a limited in scope kind of response, that this isn't something that they would like to escalate to get out of control that would derail these ongoing peace talks. So it's a really difficult line that the U.S. and others are kind of walking here, but essentially they're saying there's not going to be any more strikes. Clearly the U.S. wants to continue peace negotiations. Trump has made it very clear that he would like to see something resolved between these two nations within a matter of days, potentially weeks. But this is really an effort by the United States to contain some of that fallout here. I think, though, David, the really important thing to remember here is that over the last week, we've seen sort of an exchange of strikes involving a number of nations that really does mark one of the most violent periods of this conflict since that initial ceasefire between the U.S. and Iran was announced at the beginning of April. So it's a little bit difficult to see where exactly we go from here in terms of establishing something that could lead to longer lasting peace.
Yeah, we're trying to triangulate really the direction of travel. I mean, we woke up this week with oil below 90 as a headline in terms of the encouraging side of things. Jill, what is the course of travel here? Are these strikes, sporadic as they may seem, are they self-contained or are things getting actually worse?
I mean, I think at this point, David, a little bit hard to tell. We'll have to see whether or not what Central Command says here actually does hold, that there's not going to be any further flare-ups. But I do think that, when you look at the last several days, you had, the dust-up between Israel and Hezbollah, that attempt at, sort of a truce between Israel and Lebanon and Hezbollah that kind of fell apart. And then you saw a little bit of that flare-up over the weekend. So I do think the fact that you have seen this significant military action is a bit concerning when it comes to the status of these peace talks. I do think the other thing to note is that J.D. Vance, Vice President of the United States, was on a television network earlier today saying that it could be weeks, maybe months, for something to ultimately be resolved here. So you're getting a lot of different timelines that are coming out of the United States right now. I think just indicative of the fact that maybe the Trump administration does want to bring things to a close, but there's a lot of daylight between these nations. There's a lot of potential for risk here in terms of these types of military actions. So they're trying to bring things together again, but it's really unclear how long it's going to actually take to come together.
Jill, thank you so much for getting us up to speed. Jill Deese is there in the Hong Kong studios. Markets we're down about just under 1% right now in the Asian benchmark. We're coming off a 2.6% gain, of course, in the previous session. When you look at the Chinese markets, a lot of things to consider. A group of stocks we're tracking, almost anything that has to do with this build-out in data centers, following, of course, the Bloomberg report, massive one, of course, which caused a movement in markets overnight. So the headline is China is preparing to spend around just under $300 billion, that's US dollars, over the next 5 years to build out its capacity across data centers across the country. You did have, as we were just mentioning, their shares of data center service providers overnight. You have GDS, VNet Group jumping about 4%. There we go in the U.S. session following that report. The details right now with Min Lo, our China correspondent, here with us at Bloomberg Invest on our set here. What do we know about this build-out?
Yeah, it is one of the most aggressive attempts yet to really lay the foundation for China's future AI development, right? So about $300 billion to create this interconnected network of data centers across the country. So it's really pulling together that fragmented regional resources, and it would eventually, of course, benefit all sectors, right? These enterprises will then be able to access flexibly and more cheaply the AI capacity, the spillover effects when it comes to the speed of AI iteration, the expansion of agentic AI services. But one thing to note though, $300 billion sounds like a lot, but it's spread out over 5 years. So divide that by 5, it's about $60 billion a year. But you consider what the US hyperscalers are spending in a year, right? More than $700 billion. So that amount is still far above what the Chinese government is spending. So still a lot to go, but this is part of the self-sufficiency push, right? Because the Chinese government wants about 80% of those suppliers to come from the domestic players like Huawei, like the domestic telcos, they will stand to benefit, while the US players like NVIDIA, like AMD, they are not likely to get a look into this project.
Do we have a better understanding how this is going to be funded? Has the funding been raised? What do we know about that aspect?
So funding-wise, the bulk of it is going to come from sovereign debt. So so the ultra-long special sovereign bonds will form a big part of that. And then the national investment funds that are supposed to steer national investment, for example. But a part of it might come from also private investors as well to supplement that.
Right, Min, thank you so much. Min Lo, there are China correspondent. Lots to watch across as we go into the market open today, 20 minutes away. Speaking of markets, we'll be talking market strategy with Yvonne Hong Kong here, who advises really in investing in terms of the scarcity amid shocks from geopolitics and the AI boom. Global equity CIO Jeff Lee is standing by here. In fact, on our set, he's being wheeled in right now. Lots has come up, of course, at the China show here, the Open, Shanghai, Shenzhen, and here in Hong Kong. The opening bell 19 minutes away. You're watching the China show. Good morning. Welcome back and good morning. We're coming to you live from Bloomberg Invest here in Hong Kong. Things are about to just get underway, so if you're hearing a little bit of background noise, the crowd is in, and we are waiting for the Hong Kong Financial Secretary, Paul Chan, to make his way into the venue, and of course, our very own Yvonne Man will be leading the fireside chat in about, if things go on schedule, about 20 minutes or so from now. At about the same time as the Open, and as you can see, we are called lower across these equity markets. Joining us here on set is Jeff Lee, Global Equity CIO at Yifan Hong Kong, the Hong Kong arm, of course, of one of the largest ETF providers in mainland China. Jeff, good morning. Very nice to see you.
Great to have you.
I think it's been over 2 years since we last spoke. How would you describe sentiment right now across these markets?
I would say the sentiment is cautiously optimistic. On the one hand, people have accumulated a huge amount of profit.
Yeah.
And the fundamental trend in the industry that's driving the market, which is AI, is really strong. But at the same time, people worry about a list of things, Fed tightening, and whether AI has a bubble, things like this. So any negative move, any negative news flow, even if small, will move the market quite a lot. And you see, big up and downs in the market recently.
It's quite volatile recently,
Indeed.
Especially given how the run-up in specific assets, like across the region. Let's talk about the macro. So the latest in the Middle East is certainly a flare-up. We're seeing oil prices obviously remaining elevated, not quite at the peak, and it's looking like the Fed might hike interest rates, to your point. What does the macro look like to you in the second half of the year?
The macro looks, for me, the macro is, so for the first half of, before the US and Iran conflict.
Yes.
The macro was mild. Liquidity was loose.
Yeah.
Fiscal policy was accommodative. After that, now the macro environment might be tighter, but the fundamental of the industries are so strong that take the leadership. So from here going forward, we will have a slightly tighter environment, macro environment, but that's not too tight to make people worry about asset pricing, valuation. A relatively tighter, but not super tight environment. And that will allow fundamental technology sectors fundamental drive the market from here.
And how are you thinking about AI? I know that's a very broad term that can mean many, many things, but is there a bubble? Is there a valuation bubble? Is there a CapEx bubble? How are you looking at the entire space?
Right. We look at from company perspective.
Okay.
When we don't think this is a bubble yet.
Okay. On a valuation side.
On a valuation perspective. Okay. If we look at the leaders like NVIDIA and Chinese, supply chain leaders in this environment, in this market, their valuation is still very reasonable. And we're talking about 10 times PE. I wouldn't call that a bubble kind of valuation.
In fact, that's cheap historically.
That's actually cheap. The reason being, people worry about the sustainability of the fundamentals. So that's why you wouldn't be able to give companies a long duration valuation. But in fact, the fundamental could last much longer than people are willing to give price for. So I wouldn't say this is a bubble. But by looking at how the prices of certain assets, certain sector move, I believe we could be in the early innings of a bubble forming.
So what's the advice? Where should investors pivot towards? What's the overweight within AI, and where do we need to be cautious?
The overweight would be always with the supply chain, the point of the supply chain that's suffering from the most severe shortage.
The scarcity trade.
The scarcity trade, exactly. So we have, from last year we have gone from GPU to memories,
yes,
to this year CPU, and to fiber communication, optics communication, etc., etc. So the scarcity will change, move around up and down the supply chain. But stay with that would usually be the most profitable trade. But the whole, I wouldn't worry about the whole fundamentals because last year we were worrying about return on equity, return on investment.
Right.
This year, this conversation has become much less because we see companies.
Why do you think that is? Why has that changed?
What has changed is entropy. You are seeing the leading model companies are generating huge amount of growth.
Okay.
I mean, it's becoming it's the fastest growing company in human history, and they're reasonably profitable. So the ROI loop is already closed to many investors. So people worry about return on investment much less this year. So this trade attracts pretty much all the capital from all over the world to this sector.
When you came in earlier on, during the break, you mentioned about China.
Yeah.
And the shift you think that is underappreciated from cost leadership to tech leadership. What does that mean in simple English? And how do I express that in the markets?
China used to have a very simple narrative. Cost leadership. We produce things cheaper than anyone else.
Including the models.
Including the models.
Which are free, I guess, in some cases, right?
Right. But now China is becoming, the competitive advantage for China is increasingly innovation driven. The second largest economy has become the largest engineering ecosystem. That means the key capabilities is to innovate, commercialize, and scale up in the lightning speed. If you look at industries like electric vehicle, robotics, biotechnology, batteries, now you just mentioned AI. And these industries, China are no longer followers. They are, in many cases, global leaders. So we're seeing more and more companies moving up the complexity curve in the global supply chain. And that's what I mean by taking from leadership, cost leadership to technology leadership.
When does that show up in earnings expectations? Because on a broad basis, when I look at the index, for example, and in terms of, let's say, projected EPS 12 months down the road, that doesn't seem to be showing up yet. It's still a very cost-focused, competitive-focused dynamic that we're seeing across most sectors. Not all, but most sectors.
If you group everything together at the index level, yes, that's what you're seeing. But if you look underneath, there's a huge divergence between companies can innovate and companies that's more of a traditional macroeconomic driven business model. The technology-driven companies are doing extremely well. And this is reflected in the divergence between the sector performances.
Right.
If you look at the index, it didn't go anywhere, but a certain sector has gone up significantly over the last 2 years. And if you find the common factor for those companies,
right,
they are either innovations or companies who can export, which is driven by innovation.
I mean, that's a good nuance to make there, because I think it also depends on which index you look at.
That's right.
If it's a Hang Seng Tech against the Star 50, for example, which is very, very different. We're seeing this massive build out in fundraising, whether that's in the US, SpaceX, you have Anthropic, you have OpenAI. When do we see that wave of fundraising across the Chinese markets for their own build-up?
Right. You mean the IPO impact?
Whether that's IPO, debt fundraising, that seems to be the missing piece so far.
The point I was raising earlier,
Yes.
which is the strong ROI in this space is attracting all the global capital to here. I mean, it's a rational choices for all sorts of investors. When you look at what do you invest, everywhere else, other sectors, you find much less competitive returns potential. And you look at this space, whether SpaceX or Anthropic,
Yes.
anything related to AI, you see a lot of return potential. So, from your capital allocation perspective, you would be willingly allocate more to this space, even by moving capital out of the rest of the economy. And it attracts the global capital too. It's not just U.S. capital. So capital all over the world will come and support the IPO. So we're talking. People worry about the SpaceX IPO and
Right.
the three big companies. They will raise something like 200 billion, which is something totally digestible by the market.
Okay.
So I wouldn't worry about the funding just yet. It's a rational choice by capital seeking for yield.
And just very quickly, your broad sense of capital from onshore China, does it remain in China? Do you think that comes to Hong Kong? Where do you see flows going very quickly?
The demand for diversification is always there.
Okay.
And there's legitimate channel, which is invest through the QDII scheme.
Right.
And that we see continuous growth there. We manage some QD funds and they continue to have inflows.
Fantastic.
And that will not change. And the IPOs and all the capital activities will not change the sentiment, the need for capital investing globally.
I won't keep you. I know you have a busy day ahead. Jeff, thank you so much for spending the time with us here. Jeff Lee, their Global Equity CIO at eFund Hong Kong. We'll get you a preview of the market day ahead. We'll be back in a couple of minutes. This is The China Show. Good morning. Good morning and welcome back. As we go into the open today, lots to talk about. Bloomberg Invest, of course, in Hong Kong. We're coming to you live here out of the venue. Lots of good conversations on your screens. And in fact, in a couple of minutes, Hong Kong Financial Secretary Paul Chan is about to sit down with our co-anchor Yvonne Man. Stay tuned for that conversation. And we'll leave you with a look at, of course, at the venue that's filling in here as we are about to get underway. The open is next. This is Bloomberg. Good Wednesday morning from the Asia Pacific. A very warm welcome, in fact, if you're just joining us. We're coming to you live out of the Bloomberg Invest here in Hong Kong, where, as you can see, we're just about to get underway. And our colleague Eric Schatzker, of course, is giving the opening remarks, and shortly followed by our very own Yvonne Man, of course, will be sitting down with Hong Kong Financial Secretary Paul Chan. Stay tuned for that conversation. As we go into the open today, just three quick things from my end. Number one is, of course, we had to digest the latest flare-up in the Middle East. We've got a lot of headlines coming through in the last, 40 minutes or so, point one. Point two is we are about to get some CPI numbers, inflation numbers coming through out of China. I'll get you that once they cross the terminal. And number three, of course, this massive build-out. Bloomberg reporting suggests close to $300 billion in the data center build-out across China and how that affects markets right now. And on that note, let me bring in my colleague Avril Hong with a look at these markets. Avril.
Yeah, I think we already got a bit of a prelude based on the reaction in some of these ADRs of China cloud service providers overnight. And take a look at how things are opening up on the mainland. We're seeing a bit of pressure continuing on the CSI 300. ChinaAMC, interestingly, also is pulling back a little bit. There had been some expectation that this 2 trillion yuan or $295 billion AI build-out plan over 5 years would be supportive of some of these Chinese AI-related stocks. Of course, this is part of China laying out the foundation, aggressive, as our colleague Min Min Lo was just highlighting earlier on in the program. Take a look as well as what we're seeing in some of these other shares that we are watching. Capricorn, for one, is up about 2.3%, so a bit of an outlier. So maybe you are seeing a bit of that read-through from the AI plan. Take a look at how the Hang Seng is faring. Of course, it has been pulling back the past 5 sessions, and yesterday, even though the likes of Tencent was an outlier of sorts, there was a lot of optimism given how its AI integration for the WeChat seems to be going quite well. It is still a down day. Stocks in Hong Kong also coming under pressure, at least on an index level. The Chinese internet giants are still pulling back, and this is, of course, a sign as we look at Tencent, a bit of an outperformance, or not doing as badly as some of the other names. Yesterday, of course, it did advance by the most since late 2022. We're also watching of these encouraging signs from its bond take-up, $4.7 billion worth, and that's going to be put towards AI spending. Flip the board again. Of course, we've been trying to unpack the impact that this 2 trillion yuan plan might have. Data centers are in focus, but we also have the likes of Bloomberg Intelligence early reaction that China telcos could benefit. The likes of China Telecom could lead the pack because of an injection of more affordable capacity. So you're seeing a bit of green on the screen there. And this is against the backdrop of the spending on an annual basis could be 4 to 5 times more than what they've already been setting aside or budgeted for this year. City analysts also putting out a note of how some of these localized AI server ecosystem proxies could benefit. They've highlighted the likes of ZTE, Lenovo as beneficiaries as well. And part of the ecosystem today that's doing well is BWin Storage. You're seeing that stock surging almost 5%. Of course, we also got word based on the filing that it has inked an almost $2 billion deal to buy NAND memory. So those are the things that we're watching in the session today, Dave.
Okay, we're also watching inflation numbers coming through. Nothing that, if you've had your morning coffee, nothing incremental in terms of what would wake you up. So basically bang in line in terms of the PPI number is 3.9%. The median was 4, the same number here. Just in terms of absolutes and size and scope, that's the fastest PPI wholesale price inflation going back almost 4 years. In terms of CPI, we're coming in slightly softer than the median. So 1.2 on headline, this is for May, that's year on year, and the forecast were for 1.3%. I'm also just glancing to my left. I'm looking into from where we are set here, of course, at Bloomberg Invest, and just looking to see if they're about to begin. It's looking like we're about a few minutes behind. So anyway, the reason I bring that up is, of course, in a couple of minutes, we'll be getting the Financial Secretary, Paul Chan, on stage with our Yvonne Man. Of course, we're bringing that conversation live and in full. Right, so as we wait for things to sort of trot along, let's get a preview of the trading day ahead and really what to expect within the backdrop of the day's trading and the broader themes across these markets, things like geopolitical risks. Front and center, you have this renewed flare-up, of course, in the Middle East, and everything in between that remains agnostic to really these geopolitical concerns. Let's bring in Lulu Chen. She's here with us on set, our managing editor for Asia Finance, Investing, and Wealth. So you cross-section of good asset classes, geographical exposure. So what do we need to be watching today?
Well, if you look at what's happening in Hong Kong and Asia right now, this year there's been a real revival in investor sentiment towards Asia-based PEs and also China PE and VCs. Part of that is driven by AI, which is a powerful catalyst for these renewed interests, especially the AI technology coming out of the region from China. Fundraising activity is rebounding. So we're going to talk about all of these topics with our panelists later today. Another thing on our radar is the connections and new initiatives coming out from Saudi Arabia and Hong Kong, some new developments on that front as well. So everything from PE, VC, and also asset managers. You have BlackRock here today. Right. Also Apollo is here, PAG is here, so lots to talk about on those.
Yeah, we're going to get into all of that. I mean, there's a very clear focus on private markets and private capital, right? Despite and amidst some of the flare-ups we're seeing in some parts of the private credit market, you specifically, talk a little bit more about this, have a conversation later on private capital. Where is the conviction now?
Exactly. The boom that we're seeing in private markets is also partially helped by the boom that we're seeing in the IPO markets earlier this year, the strong pipeline and all these companies that have catched the wave of whether it be LLMs or AI technology, hardware, robotics. Another interesting thing that I'm looking out for is how China and US compare specifically when it comes to the AI race. What are our panelists' views on how big that gap is? And also, what are the strengths and weaknesses for both sides? The other thing is the capital flow. Tensions are still flaring up there. You saw with the ban list, Alibaba being put on that list as well. Whether these frictions are going to continue going forward and what that means for all these investors who are trying to straddle both sides of the world.
Yeah, and just maybe on the cross-border flows aspect, I mean, what a time to be really having these conversations against the backdrop. And also just to mention too, and you guys are all over the story, Hong Kong overtaking Switzerland, a BCG report, I believe. So what kind of color will that story bring across these conversations?
Yeah, very interesting timing for Hong Kong to surpass Switzerland in terms of being like the hub for the wealthiest.
Right.
At the same time, that happened in conjunction with China really cracking down on offshore fund flows, the offshore trading, and then the wider backdrop being China really trying to map its offshore wealth, seeing where the Chinese ultra-rich have put their money, including inspecting into these offshore trust structures, and the restriction of red chip company structures, telling some of these companies to unwind their structures and bring more transparency into who's behind these companies, who are the beneficial owners that are going to benefit and generate immense amount of wealth if they IPO. That is the bigger backdrop of all of these moves happening.
Fantastic. Lulu, thank you. Lulu Chen there, our managing editor for Asia Finance. Investing and wealth. For our Bloomberg clients, you can follow more on what's taking place here. All the actual developments, some of the headlines coming through, some of the context, analysis and commentary, of course, coming through. That's going to be on your Bloomberg terminal. We have an ongoing blog right now, TLIV Go, for our terminal subscribers. And right now, I believe our colleague Eric Schatzker is giving the keynote opening remarks. And we'll take a short break. And by the time we're back, we should be up and running with Paul Chan. Lots more ahead. In fact, no. We are taking straight live, of course, into Bloomberg Invest right now, where it does seem, there we go. Okay, on your screens right now is, if that face doesn't look familiar, that's Paul Chan. Oh yeah, and that's Yvonne Man, of course, our co-anchor. And I believe we are now just about to get underway. Let's take you straight inside. Let's listen in.
That sizzle reel just now just showed it all of the buzz that we're feeling here in Hong Kong. And I want to add to that buzz, Secretary, and show a chart. This is what we do in Bloomberg, right? And the China show. Look at the Hong Kong GDP numbers that we got in the first quarter here. We were talking about something that's punching close to 6% for the first quarter. Yep. Really being fueled by AI, the boom that we're seeing when it comes to exports and imports. There's a little bit of a recovery in the property market. IPO market continues to be strong here after we talked about reclaiming the top #1 spot for IPO market last year. And as Eric just mentioned, we just surpassed Switzerland when it comes to being an offshore wealth hub. So I'm going to use my unbandaged hand and finger to put my finger in the wind, Secretary Chan, about a pulse check of where we are.
Always up, right?
Always up. Hopefully. Does that mean there's more upside and downside risks to the economy? Where do you think this growth momentum can continue?
Well, the momentum continues to be quite strong. Take the IPO market, for example, the number of companies queuing up for listing, over 400 major companies. And we are also exploring with other markets like Korea, the Middle East, ASEAN, to have more dual listing. Not just stocks, but perhaps to begin with, things like ETFs. So the stock market, we remain confident. Asset and wealth management momentum also very strong. Capital flow coming in. Last year, capital inflow into our various funds total over $400 billion US. So it is quite a significant increase compared to the year before. At the same time, we are very committed in terms of developing our technology and innovation sector, which will be one of our key future economic growth engine. So, multi-pronged approach.
Multi-pronged approach. The last time we spoke, Secretary, was back in March. I think it was just weeks, maybe days after the Iran war broke out. And you said it takes a few months to really assess what the inflation dynamics and growth dynamics will be. We're 3 months in now. I have to get your update here on how you're viewing the macro risks right now.
Well, over the past few months, as you may have observed, although the fuel costs went up, but overall,
one of the most expensive in the world in Hong Kong, I have to say.
Well, we don't encourage
prices at the pump.
We don't encourage people to drive fuel-driven car. Yeah, use EVs, please.
Yeah. But does it mean that there's more? How do you balance the risks right now? Do you think that there is more upside or downside risk to your growth forecast? I think it's still around 2 to 3% right now for growth this year.
Well, the inflationary pressure will be building up. At the beginning of this year, we put 1.3% of the inflation rate projected for 2026. A few months ago, we revised it upward to about 2. So it may be well over 2, but still manageable. Because, say, for example, for energy supply, the majority of the energy supply is across the border, and most of them are renewables. So the impact on us, yes, particularly for those sectors like transport, they are affected, of course. But at the same time, the government responds very fast. We roll out support measures to relieve some of the pressures on them.
We talk about just this, even if we see the war end today, that inflation might stay here for a little bit longer, given just the damage to energy infrastructure, how long it takes for energy flows to resume the Strait of Hormuz.
And also the disruption to the supply chain.
Yes. Markets are shifting their forecasts, or at least what central banks can do. We've seen some central banks in this part of the world already raise rates. Traders are pricing in a Fed rate hike by year end. Can Hong Kong withstand a tightening cycle?
Our dollar is pegged to the US dollar. So in a way, we are affected by the interest rate trend. Our assessment for the rest of this year is that interest rate in the US, given the inflation, very difficult to come down. But at the same time, although the trend is the same, but it's not on a lockstep. When you look back a few years ago when the interest rate in the US went up or came down, largely the trend is the same, but we judge the impact on Hong Kong based on our liquidity positions. Say, for example, if the capital inflow remains very strong, the interbank liquidity is high, there is no reason for us to push up the interest rate. So remain vigilant, but at the moment, I think wouldn't be any very significant changes. Yeah.
I have to get your take on the regulatory environment right now. I think last time we spoke, Hong Kong in some ways is a victim of its own success amidst this IPO boom. We were talking about the priority is quality listings. The last couple of weeks, we've seen what looks to be a pretty unprecedented crackdown from China on cross-border trading. What we heard is that it started in the brokerages, but there's lingering concerns in the market now that this could spread to financial services here in Hong Kong, whether it's wealth, IPOs, property. What are you hearing on the ground?
Number one, the central authorities are very supportive of Hong Kong. They want Hong Kong to succeed as an international financial center, so no doubt about it. This is one. Number two, the recent crackdown are mainly on those people who move their funds to Hong Kong for different investments, not through legitimate means. So if the capital inflow are in the proper channel, they still are encouraged. We are still working with the central authority, for example, on further improving the cross-border GBA management, wealth management connect, to expand the quota of investment by individuals in the GBA area and diversify a little bit as to the products that they can invest. So that is just number one. But from a broader perspective, we have the different connect schemes with the mainland, stock connect, bond connect, and on that, we are also building an infrastructure, a custodian infrastructure, ICSD. It is International Central Securities Depository Infrastructure, to enable different securities, bonds, equities, to be put in the same platform, to enable cost collateralization, so that liquidity could be quickly enhanced. And at the same time, on the basis of these collaterals, you can roll out different derivative products. So that is also one way to enhance capital efficiency. But from a broader perspective, even for the stock market, we are reviewing our listing regime to make it move with times, make it easier for companies of the future. Say, for example, high-tech companies, to be easier to list on our stock exchange. We are also working to expand, to lower the transaction costs, to improve the settlement cycle, so it is on multiple fund, to enhance the competitiveness of our listing regime.
We've seen some reports of banks maybe taking precautionary measures, whether, there's one Hong Kong bank that, in one of their branches in Shanghai, that they suspended opening new accounts for mainland clients. We've heard some Chinese banks here in Hong Kong that have also suspended some of these offshore accounts as well for investment. We've heard banks here, and the UBS, for example, has postponed a wealth event in China. HSBC has talked to their Hong Kong-based private bankers, saying, discouraging them from traveling to the mainland for now. What is the message to banks right now? Because is this an actual directive from Beijing, or are banks right now just being more precautionary?
Well, different banks have different practices, but I guess for the banks, the mainland market is growing in affluence, growing in their aspirations to have certain asset allocate offshore. But this must be through proper means. Say, for example, insurance products.
Yeah.
The insurance products in Hong Kong, nowadays insurance is not just for life insurance or medical, but a lot of them are investment linked. So previously, we have observed substantial capital flow coming to Hong Kong, investing in insurance products.
Yeah.
Most welcome, of course. But at the same time, some of them may not through the proper means. Now it is just put it back to the proper channel. But the products here remain very competitive, very attractive. And we are also working with the mainland authority about the possibility for our operators to set up an organization not for selling, but for client services. So this matter has been receiving attention, and I do think when we put this into the proper channel, we can inspire the confidence of the mainland authorities about the unwarranted leakage of foreign exchange reserve. Then with that trust, we can move forward.
Do you think
on a
it'll
more
have
sustainable basis.
Will it have any long-standing impact on flows? Does it redirect these measures here, redirect flows back domestically to the mainland?
But I think the interest and the desire to have asset allocate offshore will remain. And this will continue to be a very, very strong driver for our financial services sector.
Yes, it's the long-standing practice has been, though, if you're a wealth manager in Hong Kong, is that these Hong Kong-based private wealth managers will go to the mainland, they'll meet and build relationships with clients there, and then they come here to Hong Kong to open an account, to buy an investment product. Will Beijing still allow that to happen?
Well, I think we have to step back a little bit to look at the bigger picture. Yes, in terms of cross-boundary asset and wealth management sector, we overtook Switzerland.
Yeah.
And when you zoom in, about 56% of the AUM, the capital flow,
comes from China?
No. This come from outside of China and Hong Kong.
Okay.
And we are seeing increasing flows from the Middle East and ASEAN as well. So let's focus on building a bigger pie and improving the connectivity, which also, in a way, will help the sectors to develop.
Could it curb spending when it comes to the property market as well? I mean, the first quarter of this year, I think mainland buyers were sweeping up a lot of property here in Hong Kong.
Well, compared to the peak, still very moderate. The situation is also different. A couple of years ago, in the year 2008, until 2017, there is shortage in supply, shortage in land supply, shortage in residential property supply, coupled with the buying power from the mainland, went up property price, and we introduced different demand side measures to suppress foreign demand and investment demand. But now the situation is different. We have enough land supply on the market as well as in the pipeline. As you may have observed from the land sale program we announced after the budget. Actually, that land sale program, the message are two. The first, to our people, we have enough land bank. So when the property market goes crazy, we will timely roll out additional land supply. So don't worry. But at the same time, the message is also to the developers. We have been very prudent and very careful in terms of property price and land supply. As you may have observed, say for example, in the land sale program, the number of lands sold by us, the number of units to be built on those lands in the past few years, not exceedingly large. When we roll out the land sale program, we also took into consideration, number one, the residential development undertaken by the MTR Corporation, the railway plus property. Number two, lease modifications, meaning that land initially not for residential purposes now being rezoned and able to be developed into residential properties, and also upzoning. So taking this all into consideration, the final figure is the land sale of the government. So we have been very prudent and very careful. Another example is on the office and commercial property. As you may have realized, since 2023, we stopped rolling out any office land because the demand supply situation. We let the market digest the oversupply of offices, but at the same time, we also roll out some more innovative measures to help digest the existing stock. For example, we encourage some office properties in certain areas, suitable locations, convert into student hostels. This is just some of the examples.
Yeah, we've heard when it comes to commercial property, right? You have so many international firms that are setting up offices here.
Expanding
the
as
market
well.
is getting people excited and coming back to Hong Kong in some ways. We talked about the IPO pipeline, which you think remains strong. You think will be better than last year in terms of fundraising?
Why
Confident?
not?
Why not?
Of course.
Okay.
Yeah.
I have to ask, because we have a lot of big IPOs coming up in the US. SpaceX is the one that comes up first later on this week. We have been reporting, sorry, my mic, that Hong Kong and Chinese investors have been barred from getting a piece of this IPO. Do you know anything, like, have you heard of anything? Why do you think we're seeing this right now? Because it seems like it's about national security concerns, but what are you hearing?
And there is also unilateralism there. Well, previously, you must have heard about banning Chinese companies to be listed on the US exchanges. We don't think it's a wise move. In a way, we in Hong Kong could be an unintended beneficiary. These companies will come to Hong Kong for listing. But looking forward, I think for us, what's important is concentrate at doing the right thing, improving our listing regime, promoting various measures to enhance liquidity, quality-wise, be stringent, defend our reputation, then Hong Kong will continue to prosper.
Are you surprised that Hong Kong investors have been lumped in with mainland investors? I don't think I've ever heard something like that in the commercial space, right? You hear about that, about Hong Kong is part of China and whatnot, but to lump Hong Kong investors and Chinese investors and bar them from participating in a US IPO, what do you make of this sort of
I think
trend?
that this is detrimental to your US interests. Why don't you welcome the liquidity from all over the world? Yeah, I think this is, for us, when you look at Shanghai, look at Shenzhen, we have huge number of excellent tech companies at very attractive valuation, waiting for investment. No matter it is IPO or private equity, VCs, or even patient capital. Nowadays, through the Hong Kong IC, we have been channeling sovereign funds from the other jurisdictions and long-term funds to co-invest with us into industries of the future, hard tech, health tech, life science projects. So plenty of opportunities. I think for Hong Kong, as I mentioned, concentrate to do the right thing and work with different partners to the extent possible, will continue to prosper.
The reason for the restriction was because of national security risks. This is critical technology. How would you define then what critical technology is? Because wouldn't any AI company then be in that realm?
Oh, you should ask the US administration.
How do you see that play out though? I mean, you are yourself in the budget was advocating for new listing rules to attract more of these Chinese aerospace, commercial aerospace companies to list here. For Hong Kong to become that fundraising hub for them to go global, right?
Yeah, for us, grab this opportunity to grow stronger.
Okay.
Yeah.
Okay. I was going to get your take on, there's this big, massive story that we talked about today about China and how they're spending, I think it's 2 trillion RMB, nearly $300 billion in terms of building AI data centers in China domestically. How do you think Hong Kong is going to fit into that?
Well, we are also building our own computing capabilities on this multi-pronged approach. Apart from computing capabilities, I think what we bring to the table is the international use case scenario, the international data, and international talent. So play to our strength. They have their strength. They are very strong in their basic research, in their modeling, large language model for the domestic market. But when these tech companies need to go overseas, need to expand global, this is where we come in. We come in with capital, talent, data, computing capabilities, and use case scenario. So we can work together.
One last question. A lot of economies are dealing with this right now, the haves and have-nots of AI, where it really is kind of dividing the winners and losers and the distribution of wealth. How does Hong Kong, as a financial secretary, how do you deal with this kind of K-shaped economy?
Well, AI training for all. This is something we have to embrace. We need to learn it. We need to understand it, use it, and use it well. Then you will find this is so useful and helpful and make life even more wonderful because you will have more time, not to do the repetitive work, but for you to think and for you to find new opportunities.
How are you using AI now? I wonder.
This is a great
As
question.
a financial secretary, how do you incorporate AI in your work?
I believe the information I gave you, some are from AI.
All right. We'll have to fact check some of that. Okay. Secretary, it was a pleasure. Thank you so much for joining
Thank
us
you,
here
Yvonne.
on stage.
Thank you.
All 10, everyone. Thank you.
Very nice. Thank you.
All right, they covered a lot of ground there. Of course, Yvonne's fireside with the Hong Kong Financial Secretary just wrapping up. And, we'll be taking straight back in once we get most and some of the other, of course, panels underway. Just to recap, in case you missed that conversation, several takeaways, at least from my end, that really stood out. It's clear, number one, that there is an expectation that rates will remain high, I think is point number one. And point number two, and what that means for growth is still, growth for Hong Kong specifically, is still out. The jury's still out on that one. Hong Kong as a venue in as far as improving and diversifying the options here for investors. And I think as far as the equity markets go, I think Yvonne pressed him on whether or not this year will be better than the already high bar of 2025 and as far as IPOs are concerned. And his answer was, of course. Now, what that means numerically, you have to stay tuned for my conversation later on, of course, with the Hong Kong Exchange CEO Bonnie Chan, because we'll be talking about the pipeline. There's been a lot of conversations around what sectors will be hot. Robotics keeps coming up a lot. So we'll get into all of that later on. The other thing to mention, too, they discussed some of the big news around the restrictions and enhanced regulatory oversight in as far as outflows are concerned, and as far as Hong Kong is concerned, that any inflows via the proper channel is still very much encouraged. Apart from that, they touched on a lot of things. The property market, they see will do well. The clear and consistent message from the government is that they're sending a message to home buyers, property developers. The office space is very interesting too, and as far as they are giving a lot more time for the industry to absorb some of the excess capacity in office space that had been built up here in Hong Kong. That's a point that we'll be talking about there. And apart from that, lots of other things. Just to mention, just for our Bloomberg clients, of course, you can check out most of the commentary and context there from that conversation with Yvonne and the Hong Kong Financial Secretary. That's your T-Live. That's the function you run. We have an ongoing live blog, of course, on things taking place here in Bloomberg Invest. Now, while that was taking place, just to also mention, we understand, in as far as issuance is concerned here, separate piece of news, that China will be issuing about 15 billion, that's renminbi, sovereign bonds in Hong Kong. 4 batches, 2028, 2029, 31, and 36, front-loaded in as far as 9 billion of the 15 will be in 2028 and 2029 tenors. The tender date for that is in about 6 days, June 16th. Okay, apart from that, there's lots of also developments, and as far as Middle East is concerned, we're also getting Indonesia, of course, up and running, given the surprise rate hike that we got out of Indonesia. Let's bring in our team. Of course, Avril is back with us for a quick chat of markets. Avril, what are you watching now?
Yeah, a couple of things, including EMs, as you just highlighted, but also the read-through from that AI build-out plan that Bloomberg has been reporting about from China, which is going to be worth about $295 billion. We are seeing some of a clearer read now, following on from what was a pretty wobbly start, I think, to the session. Now you're seeing some of these stocks, right? The cloud providers and related ones that are up about 2%. And flip the board as well, take a look at some of these chip-making related stocks. The idea here, from what we know of this reported plan, is that they're going to be relying on local. So the likes of Huawei could account for, 80% of this build-out. And that could put the likes of NVIDIA and AMD, of course, on the back back foot. So in terms of some of these Chinese chip making related stocks, you're seeing Hua Hong in the green as well. Lenovo was interesting. It was highlighted as one of the stocks that could benefit longer term maybe by the likes of Citi analysts, but you're seeing that pullback. BWin is another stock that we have been watching in the sector, following on from that word that we got on the filing that it will be inking $2 billion roughly worth of the NAND memory purchases. Fit the board again, as you highlighted what we're seeing in the emerging markets after that off-cycle rate hike from Bank Indonesia just a day ago, 25 basis points to 5.5%. That also did help some of the reprieve, I think, across Indonesian assets. You're looking at the rest of Asia on the downward trajectory following on from what we saw in the US and the wobble in chip-related names, of course. But when it comes to stocks, the currency, that hike seems to have helped to stabilize things a little. Of course, we also had our colleagues in Bloomberg Intelligence talking about how a 75 basis point hike next week might be needed to stem further currency depreciation in the Indonesian rupiah. Take a look at what we're seeing in commodities as well, following on from some of these geopolitical developments. Of course, we are watching gold prices, but you're seeing that being a victim, I suppose, to that de-risking, given the dollar pain trade. Gold is moving below the 41.85 handle, Dave.
Avril, thank you so much. Avril Hong there in Singapore for us. For more context on some of the things that Avril just touched on there, perhaps we're digging deeper, of course, into some of these key themes across tech. Specifically right now, Anthony Stevens is our markets reporter, also joining us right now. Anthony, some of the things that Avril just touched on, if you could add to that, and is there anything that Avril didn't talk about that you think we should be focused on?
Yeah, we're having a very differentiated session in tech today as Korea and Taiwan and Japan see a risk management day ahead of the US CPI on really well understood themes like memory in South Korea or TSMC in Taiwan. And you're seeing those markets seeing a selling off of the most speculative themes. So for example, robotics in Korea is enduring the third straight day of really big losses. So retail is losing some sentiment there. Taiwan's retail is also very extended and they're cutting back. But one emerging theme as this session progresses is the pricing in of this China AI package. And that got off to a slow start, as Avril said, but it's really starting to build momentum now. And part of the stuff that is rallying is domestic China chip makers. Let's remember that going home overnight, Taiwan said that they would restrict chip exports to China in kind of a solidarity with the US effort. Now that's really lining up to benefit the Chinese tech ecosystem, especially on the semiconductor manufacturing side. So you're really seeing a very differentiated day of tech gains and losses in the session. And that speaks to a rolling rotation in the tech theme to manage risk down. Now, in the FX and the metal section, you are seeing this consistent weakness in gold, no matter what happens in the Iran conflict. And that is a change in dynamic. Gold broke the 200-day moving average and continues to move lower. Now, bear in mind, gold obviously has no central bank to kind of defend it, like the Korean won or the Indonesian rupiah has had. So it seems to be bearing the brunt of the dollar rally here.
Anthony, thank you. Anthony Stevens there in Hong Kong. For us. Anthony just touched on FX there. Of course, the other big move we're tracking is, of course, in the rupiah. And man, what 72 hours we've seen in that currency specifically. And of course, that rate hike that we got out of the central bank there. Marcus Wong is with us to talk us through, of course, how do we need to be looking at the currency now, Marcus?
Well, as Avril pointed out, I think the rate hike has stabilized the currency market today. But I think a very near-term risk will be the US CPI print tonight. Obviously, expectations have been very hawkish going into this, following the robust NFP numbers. So hotter than expected CPI print, which sees a dollar even gain as a result, could see further pressure to the rupiah. So again, just looking back at the rate hike that we saw, analysts are still expecting Bank Indonesia to actually hike next week. And then again, the question, will it be a 25, 50 basis point hike? One analyst was just saying, this shows how desperate Bank Indonesia is to arrest the situation of the decline in the rupiah. Another thing that's, of course, on the lookout for is Finance Minister Rupiah. There's been, of course, market chatter on whether he could move on in a sense, whether could there be a replacement coming. So there's a lot of uncertainty in Indonesian markets right now. Bank Indonesia stepping in to hike 25 basis points definitely to stabilize the market a bit. But hold your horses. I think there's still see some downside in the rupiah moving forward, especially if we get a hotter CPI print tonight.
Okay, Marcus, thank you so much. Marcus Wong there, our EM and macro strategist in Singapore for us for his take on dollar Indonesia. We'll take you straight back into what's going on here at Bloomberg Invest, and BlackRock's head of Asia Pacific, Susan Chan, is speaking with our colleague, of course, Rebecca Sin out of Bloomberg Intelligence. Let's listen in.
Buy an active equity fund and expect to generate the returns in active. And also, there is the demographic challenges of every country in Asia. And we are living longer. We have pension challenges across all. And portfolios of the traditional 60-40 are not going to generate the outcomes that we're going to need for the future. So this is why private markets is becoming such an incredibly powerful asset class within the longer term portfolios, because you need it. And it fits very nicely in so many ways, right? In terms of long-term returns, when you're saving for the future, you're less dependent on short-term liquidity, but you need to be able to see those returns, and also what you're investing in private markets. Nowadays, we always look at how do we help the countries. So infrastructure, you invest in country. So it's a way for you to also, as an investor, have a part in the development of your country.
So you mentioned private markets. It's very hot right now. You guys are heavily invested. You made 3 large acquisitions recently into private markets, but there's been a lot of negative news around private markets, especially private credit. Investors not being able to get out of positions. There's been a shortage. What is your take on this?
So don't always believe what you read in the press. Headlines are meant to be sensationalized. That's number one. Listen. There are pockets of issues in private credit, but it's really very idiosyncratic and it's very unique at the moment, okay? If we look at the overall categories, they are doing well. They are offering the diversified returns. And, we at BlackRock, you said we made the acquisitions, we firmly believe that you cannot build long-term portfolios without going into areas like infrastructure, like private credit. I would say that, with any portfolio, you have to look at it on a risk-adjusted return basis. You also have to be able to do diligence and deploy your capital where you feel is, the right area. So, I think. Sure, there are some pockets, but if we look at the grand scheme of things in private credit, the default rates are still very, very small.
And then you mentioned portfolio construction, traditionally the 60-40. How are investors constructing portfolio now? To your point, there's so many different products out there available.
So what I would say is there is probably the adjustment of 60-40 within the public markets, and then increasingly we're seeing allocation into private markets. So some of you may hear people saying 50-30-20, of which 20 is in private markets, or, there's a blend. So we're definitely seeing more and more of that whole portfolio holistic look as into the equity piece, the fixed income piece, and then the private piece. And it helps to boost your longer term returns.
So you mentioned previously income. In Asia, typically investors will invest mainly in cash and property. And it's very different to the US where people have retirement funds, they're using ETFs. How are investors different in Asia than the rest of the world, do you find?
Well, I don't have to tell you, and we all know, Asia traditionally will save a lot in cash. But this is what makes Asia so exciting, because we are seeing that shift gradually, right? Where savings is moving into investments, where most of our clients are seeing that if you did not invest in the capital market, you would have missed out. Last week I was in Shanghai, and I spoke and I gave a number that kind of was fascinating to everyone. So here's the number. If you invested $1, right, into China's equity markets over the past 20 years, you would have on average generated 6.5% per annum, okay? That is extraordinary. That's like more than 300 times over the past 20 years. If you sat in cash, you would not have done that, okay? These are just, the beauty of compounding in capital markets is incredible. Now, if you do that in every single market, you will see and you will convince yourself that you should not be sitting in cash only. You may want to sit a little bit, but you should not be sitting in cash only. So we do have to start investing in local capital markets and, of course, the diversification into global markets.
So if we look across the region and across the product offering, there's a lot of investment opportunities. Where do you see are the most undervalued opportunities within Asia Pacific? Listen, I think China, because we went 18 months ago where globally the world was like, China is not investable, China is not investable. Today, we're seeing a lot more attention on China. The valuations are, on a relative basis, cheaper. There is value, and there's a lot of value. And I think we're going to see that play out as the mega forces of AI start to play out, as this theme of Asia for Asia, because our investors want to invest more closer to the region, plays out. We're going to start seeing that clients will look towards those undervalued plays. So I definitely think China is one. The second one is Asian credit. Asian credit yields incredibly well. It traditionally has not had the attention, and I'm saying public credit. It traditionally has not had the focus because of the fact that it's largely a primary activity tool and secondary liquidity is less. So we all need to do some work there to promote and get secondary market active liquidity up. But Asian credit, we see tremendous opportunity in that category as well. So if we look to the next 3 to 5 years, you mentioned China, Asian credit. Any other sectors that you think will outperform? Or what would be the best ways for investors to express their views?
Well, I think, again, construct your portfolio with the blend of, you're going to have to invest in the US. With the largest capital markets, it's very hard to stay away from it. But I think for every incremental dollar that you're putting into the markets, think about how you should diversify, both as a hedge, but also as a diversification, because certain pockets, yields are higher in Asia, right? So we do see home country investments in all countries as something very important. The AI theme will continue to play out, but it's going to start going downstream. So think about that downstream effect and what other segments within AI and what other sectors are going to benefit. Obvious ones are going to be healthcare, biotech, et cetera. So look at how to diversify on that. Blend fixed income, blend Asian fixed income. That category is incredibly resilient and is a great diversifier. And then lastly, private markets. And I think in private markets, for us, it's about infrastructure. It's about private credit.
So if we look at what Secretary Paul Chan has said, what he said.
All right, that's what's going on there right now. We will leave that there for now, but for our Bloomberg clients, of course, you can check out and continue to follow that. Of course, it's on many platforms across the Bloomberg terminal, one of which, if you want to look at more commentary, it's T-Live Go on the Bloomberg terminal. We've managed to pull some backup here. Yvonne, of course, my co-anchor was just minutes ago before, of course, Rebecca and Susan took the stage there, was with the Hong Kong Financial Secretary. You guys covered a lot of ground, this cross-examination you did with the Hong Kong Financial Secretary.
Well, it seems like he was willing to at least address the market, some of the concerns, right? When it came to, of course, this unprecedented crackdown on cross-border trading. And it's led to a lot of lingering questions about what this means for the wealth businesses of a lot of global banks here that rely on a lot of these mainland investors to set up accounts here, right? And what I think the takeaway was that Hong Kong is really going to attempt to inspire the confidence of Chinese authorities once again after this recent crackdown. So what he says was what he's heard so far of these curbs is to really try to weed out this illicit sort of trading here.
As long as it's legitimate,
as long as it's proper
you're
channels,
welcome to come, yes.
So he still thinks that when it comes to what Beijing wants, they still is supporting Hong Kong as an international hub for fundraising and the like. He still thinks when it comes to the IPO fundraising of 2026, he says, of course, 2026 will be better than 2025. So he's still quite optimistic. He's talking about 400 companies that are on the pipeline here right now. Here's him talking a little bit more about some of the regulatory sort of things that he sees here and the changes and what it tells us about Hong Kong. Take a listen.
For the stock market, we are reviewing our listing regime to make it move with times, make it easier for companies of the future, say for example high tech companies, to be easier to list on our stock exchange. We are also working to expand, to lower the transaction costs, to improve the settlement cycle, so it is on multiple fund, to enhance the competitiveness of our listing regime.
I also asked him about our recent scoop about Chinese and Hong Kong investors being barred from taking part in the SpaceX IPO because of national security concerns and critical technology and whatnot. And he says, look, this is actually pretty detrimental in terms of U.S. interests here right now. Why can't we, in some ways, share, reciprocate, right? When it comes to the amount of capital that goes in to these, big companies.
And participate is the other problem.
And the fact that Hong Kong's being lumped into it, he said, is interesting for him as well. So certainly there's a lot to talk about. I know you have a lot to talk about when it comes to IPOs with Bonnie Chen.
But didn't he say this year is going to be better than last year?
Of course,
is what
he said. Of course. Okay, yeah. But I know you got to hit the stage pretty soon.
I'm going to try to get more details on what that of course means.
From Bonnie Chen,
yes.
right? Yeah.
Okay, so you're taking the reins.
We're going to do a switcheroo here. Stay with us. This is Bloomberg. All right, we are checking markets here this morning and some, of course, big corporate stories. Bloomberg has learned that China is preparing to spend around $295 billion over the next 5 years on a nationwide AI build-out. The plan would create a network of interconnected data centers and run largely by state firms, with AI chips powered mainly by local suppliers, including Huawei. Now, Bloomberg Intelligence, they think that China's investments in data centers can boost the country's telecom operators. Let's bring in Kirk Boudry, our senior industry analyst. He joins us now. Kirk, it's such a fascinating story about the amount of money China is really looking to build out these data centers domestically. What do you think China is trying to accomplish here?
Okay. I think you can look at it in two different ways. First of all, with that level of investment, 2 trillion won, almost $300 billion over 5 years, there's a direct benefit to equipment companies or infrastructure suppliers like Huawei. That's the name gets thrown around a lot. But also, going down to companies that make fiber optical components and things like that, they have much more sort of solid order books going forward. It's a lot of money that's being invested. I think on the other side, what it is generally across the Chinese economy, like the goal that the government wants to promote, is getting everybody using AI, for whatever efficiencies that can be generated from that, enterprises, government agencies, and putting $300 billion into data centers puts the capacity there for that to happen.
Yeah, and we're certainly seeing a bit of a market reaction. When you look at just who benefits, who could be the potential winners of this?
Yeah, again, it's there's a direct read across to equipment companies. We think that telcos can do well. The investment that the government's putting together will allow them, to sell capacity that AI services run over much more cheaply. And that should allow them to grow that sort of revenue. And you're at a crossroads where the revenue growth from core telecom services flattened out. So you need a sort of AI boost in order to get the top line growing.
Yeah. Kirk, we got to leave it there. Kirk Boudry there, senior industry analyst for Bloomberg Intelligence. But much more, Bloomberg Invest coming up. This is Bloomberg.
Other region to China, to Asia, as diversification. And as we all know, in the last few years...
We are seeing here this ongoing panel at Bloomberg Events in Hong Kong, which is really about conviction that we're seeing in private capital right now. That's Granite Asia's senior managing partner, Jenny Lee, and Hamilton Lane co-head of Asia Investment, Ming-Chen Xia, is speaking with us there on stage and really talking about what this means in the ETF world, the tokenized sort of world. Joining us now is Yimei Li, CEO at China's leading asset manager, ChinaAMC. I want to also bring in Min Lo, our China correspondent, who's here in the field here with us in Bloomberg Invest. And she's also set to speak with Yimei later on here at Bloomberg Invest. There's lots to talk to her about.
Yeah, lots to talk. And this is what the number one ETF manager in China, of course. Let me start with what's happening today, because we saw a sell-off in stocks, especially because of the geopolitical headwinds. What is your outlook, and what are you watching for in China markets in, I guess, the next quarter?
Well, I think for China markets, it's still people are very keen on getting involved with this AI trend. So we don't really, well, of course, there has been some, reflections of the geopolitical issues in Chinese market as well. But I think people are still quite excited about the new trend and new, technology taking off. So you can see that yesterday, and the market really reflect very heavily on the AI and on all the economy, new technology side.
What are flows telling you now in terms of where sentiment is?
Well, the flows are, depending what kind of investors you are, and retail investors definitely still, adding up to the fires, and there are definitely institutional investors starting to look at the dividend side of the business, and the large caps are still attracting some attentions, I think.
What are you seeing in terms of flows for domestic retail investors?
Domestic retail investors at the same time, I think, well, we mentioned deposit migration before, so we definitely have seen gradual inflow from deposits into investment side of the business. But it's kind of slow. But there are separate retail investors really are getting involved with ETFs. So we have seen investor size and accounts opening quite growing rapidly in the ETF, side of the business.
I was going to get your take on what we just spoke to Paul Chen about the regulatory environment right now. There's been some growing concerns about cross-border trading and mainland investors coming to Hong Kong, in some ways to open accounts and whatnot. Paul Chen says they need to still restore some confidence when it comes to mainland investors about this unwarranted leakage in foreign exchange reserves. Have you seen any sort of impact on these cross-border curbs on the ETF business and the flows coming here?
I know there has been some different interpretation of the reasons some regulations are tightening up. But to us, I think the regulations were already there. It just how we comply with it is an issue. So in the past, probably the compliance is not that strict, and now I think just cleaning the house and trying to make more regulations complied. I think that's the basic line for any legal regulation side of the business. At the same time, we have seen a lot of interest from domestic investors into QDII product, and I think that our regulators are also encouraging this type of regulated and really, I think, compliant type of investing overseas. So we have seen ChinaAMC, we really have seen a lot of growth in our QDII AUMs recently.
You talked about the QDII products, and obviously there is a cap as to how much mainland investors can put in. What sort of products are you coming up with to draw flows, to allow Chinese mainlanders access to these overseas products?
Yeah, I think the regulators also are trying to diversify the channels that we can invest. You probably have learned that we have ETF Connect, so we can actually invest through ETFs into overseas market currently, right? And another side is the mutual recognition. Actually, ChinaAMC, we recently got approved a new product for mutual recognition. So that also is one channel that we can invest in international side of the business. And another one is the Great Bay Area Connect.
Yeah.
So those type of connects, I think in the future will expand to greater regions and then involve more investors into the process.
You just launched this tokenized gold fund, which we talked about last time, Yimei. Tell us a bit more about this. This is the first fully tokenized gold fund. What does the demand look like here right now at a time when gold prices aren't quite behaving like they used to?
Yeah, I think, well, the first layer is still a gold fund. So from, I think the demand side, I think for gold, people have always been strong demand for gold, even though there's volatility. And another layer on top of that is the tokenization. So I think we are aiming to prepare the infrastructure for digital assets. But as for demand, because it's a long process as to how the infrastructure is going to be built, I think it will be coming and growing together with the digital assets growth in this region.
And speaking of digitized assets, you're one of the first movers when it comes to tokenized RMB assets as well.
Yeah.
Just talk to us more about that and why should investors be looking into these alternative assets?
Well, I think, when we look at products, it's not just investors, but also people who already have those assets who invest. So I think digital assets, if you think of it, people who hold digital assets really have the need to invest in different instruments. And we are preparing the infrastructure. We are preparing the layers of investment accessibility into the traditional world with our tokenized products. So I think people, it's not like traditional investors really need to invest in tokenized products. It's more like people who hold digital assets and their needs in investing in tokenized products.
And when it comes to the ETF space in mainland China, right, it's still highly regulated. There isn't any, for example, actively managed ETFs. Tell us about some of the innovations you're seeing within that very tightly regulated space.
Well, I wouldn't say it's really highly regulated because we already have the, in the sense, more active type of ETF is index enhancing ETF. So even though it's not completely passive, but it's not really like we are going toward the active side of the indexing and ETFs. But I think people really need to phase in, right? So we need to adapt to ETF, adapt to more actively managed type. And then I think definitely we are going to get active ETF in the future. But as to how the needs are going to transform into the local market, that's really going to determine when and how we are going to push that kind of products.
I was going to get your take on leveraged ETFs because we've seen what's been going on in Korea and some of these listed ones in Hong Kong, which in some ways, investors are now trying to find that protection to the downside. And it's magnifying a lot of the moves in that we're seeing in the Kospi and the like. I mean, how do you see this phenomenon playing out here and how the ETF market is really impacting overall sentiment?
Yeah, well, I think it's two-sided sword, right? We have seen a lot of the, really momentum from the, leverage side. And we also probably in Hong Kong, I think, from what I've planned in our Hong Kong office, there will be new products coming out in Hong Kong as well. But at the same time, when we seek protection, and then there could also be the places we are exposed to higher risks. So I think it's a balance for how much products we offer to the markets and how we are going to educate the investor as to what's the implications really investing in such products and the volatility that will impact their returns.
So Hong Kong, in some ways, has been used to be a gateway for international investors to trade China, but now it's sort of the flip side, where you have Hong Kong being a gateway for Chinese investors to tap international capital. What is your view on fundraising for many of these upcoming IPOs in the pipeline and access to international capital?
Yeah, definitely. I think Hong Kong has always been like the bridge, and bridging between, domestic money going out and international investors investing in China's economy. And we are quite excited about all the new IPOs, especially from the new economy, and giving a chance for international investors to more accessibility into the Chinese economy. So we are very much looking forward to participate not only from our investment side, because we also have QDII products that can invest in Hong Kong market. At the same time, we are actually attracting international investors' attention. So we have, products in Thailand, we have products in Brazil that investors are very keen in investing in the technology booming in China.
Looks like we warmed you guys up for your panel on stage is having this afternoon.
Yes,
Yimei Li, thank you.
Thank you so
of
much.
ChinaAMC, of course, so thanks to Min Min Lau, our China correspondent, joining us here at the Bloomberg Invest Hong Kong. Well, much more coming up next from a panel, really, to continue to track this private capital one that's happening currently. This is Bloomberg.
A lot more nuance. I think our advice is always, be what you are, right? I mean, if you have China's strength, you should leverage on the China strength. If you want to go to market, in international market, find partners that will allow you to lend. Some markets may be off limits and it's not where they should go, right? So I think for the mid to later stage companies, the conversation is a lot more nuanced. And I think that it has to be also very transparent. We always said don't try to be cute because the world isn't cute, right? And information, transparency, it's all out there. Your customers know, you yourself know, and so whatever you do in terms of structuring your business, just make sure that it can stand the test of conversation, or you can stand the test of media or headlines. I think maybe that's the litmus test that our founders found after they decide what they want to do, to go through that litmus test as well.
Standing the test of conversation, meaning the optics are as important as being legally compliant.
Absolutely, yeah.
Let's have a look at the poll that we did earlier. Where is your highest conviction in Asia private markets over the next 2 to 3 years? Our winner is growth equity. That's the perfect segment into our next question about
For the stock market, we are reviewing our listing regime to make it move with times, make it easier for companies of the future, say for example high-tech companies, to be easier to list on our stock exchange. We are also working to expand, to lower the transaction costs, to improve the settlement cycle, so it is on multiple fund, to enhance the competitiveness of our listing regime. I think that this is detrimental to your US interests. Why don't you welcome the liquidity from all over the world? Yeah, I think this is, for us, when you look at Shanghai, look at Shenzhen, we have huge number of excellent tech companies at very attractive valuation, waiting for investment. No matter it is IPO or private equity, VCs, or even patient capital. Nowadays, through the Hong Kong IC, we have been channeling sovereign funds from the other jurisdictions and long-term funds to co-invest with us into industries of the future.
And that was Hong Kong Financial Secretary Paul Chan speaking to us earlier on stage here at Bloomberg Invest. And certainly it led to a lot of a discussion really about Hong Kong. And what Paul Chan really said was that in some ways they do still need to attempt to inspire the confidence of Chinese authorities after the sweeping crackdown from Beijing when it comes to cross-border stock trading, which has hit some of these online brokerages. But in terms of, it's really what they said is a way to weed out illicit sort of trading, right? So if it's still the proper channels, Paul Chan still maintains
that things are still business as usual. And what he said, what it really was that in some ways, the mainland still supports Hong Kong and wants Hong Kong to succeed as an international financial hub. So, of course, markets have been a little bit wobbly when it comes to the impact this could have on these banks. We have seen some. And maybe perhaps as a precautionary measure here, suspend new accounts from opening when it comes to savings accounts or investment accounts as well. UBS, we've been reporting as well, had to suspend or delay and postpone one of their mid-year wealth events in China. HSBC is also discouraging travel from some of these Hong Kong-based wealth managers to go to mainland. So certainly there is a bit of, I guess, caution from the financial services world about what and how far-reaching these cross-border curbs will mean. But still, Paul Chan says Hong Kong for years will remain that hotspot for mainland Chinese looking to park their money overseas. So, he still thinks the pipeline for IPOs is strong. When it comes to that offshore wealth hub, Hong Kong just recently surpassed the likes of Switzerland and retained that top spot. He thinks that still remains solid for now. So certainly pretty interesting takeaways from the financial secretary here. Markets, though, at a time when we are seeing some risk trimming across the board here. The Kospi, as you can see, we're lower again in Korea by about 3.5% here today. Hang Seng is lower by about 1% and 1% losses when it comes to Japan as well as in Taipei. So Korea is still leading the charge lower here. We're focusing on some of these big moves, particularly when it comes to chip makers in Japan, for example. Tokyo Electron is doing this year right now. We're seeing actually gains of about 5% or so. Watching also moves in Tencent, still looking a little bit better, but SoftBank seems to be really driving things lower here in Japan today, and SK Hynix as well. We're lower by about 5%. Obviously, there has been some tensions when it comes to Iran as well, after the U.S. talked about possibly retaliating after that U.S. helicopter was shot, and certainly there's been more escalations and flare-ups there. So certainly that is weighing overall on risk here this morning. And really, a really perfect segue into why we're having this Bloomberg Invest event here in Hong Kong. You can check it out, of course, on your terminal. And, of course, our website for all things that's going on here for terminal subscribers. Make sure to go to the function T Live Go for all the commentary behind the scenes, all the comments that we're getting on stage there. You're watching The China Show.
This is also highly related to the funds, the quality of the GP of funds and underlying assets. So this is why to invest in secondaries, that
All right, that was, of course, that panel when it comes to private capital. Where is the conviction right now? Our very own Lulu Chen has been speaking with Granite Asia Senior Managing Partner Jenny Lee and Hamilton Lane's co-head of Asia Investment, Ming Chen Shah, speaking there on stage. We are still, of course, waiting for this new panel that's coming up with David Ingles, who's speaking with the PAG head as well. Let's listen in right now on that private capital panel.
And these companies are then getting to the end of the exit pie. So if anything, I would say private credit is probably a better asset if you're looking at Asia, because it helps to capture not just AI or tech native companies, but also the transformation that would change even category leaders traditional into new, tech transform companies. So I think credit is one way because it's non-dilutive capital. It allows the same companies to be able to tap the expertise with tech transformation, but in a private credit manner. So I think underserved asset class definitely worth a seat at the table from the growth that we are seeing in the category.
Yeah, one final question for your fund in terms of exits. What's in the pipeline, whether it be IPOs or M&As?
Absolutely. So across all our equity funds, we've had 6 IPOs in the last 12 months across the Asia markets. We have actually close to 20 companies for the next 12 to 18 months. And again, across the different markets from, of course, Hong Kong it takes a big lion's share of this, but also includes, India market, Japan market, and the US market as well. So that's why I said we need the market to stay sane and stay open.
Right.
For returns back to our LPs.
One final question. If you had $100,000, where would you put it?
Yeah, I think I answered this, right? I think in that sense, I think AI for longevity would be very cool. And if I were to look at 5 to 10 year, if I can, and said, now let's move on from AI, then there are 3 areas. I think one, quantum computing. I always thought it may be 10 years later, but where I'm seeing the talent and the engineering and the startup that's coming, we think that quantum computing may be here in less than 3 years. I think it's there. Number 2, in terms of energy, a lot of conversations about energy, right? And so nuclear energy, the different components, sensors, startups, there's also a lot of activity here, not just in the big markets like US and China, but across the board. I think governments are taking a very active approach to think about how to resolve the energy issue, and nuclear is a key. And of course, I think last, if we're all tracking the SpaceX IPO, I would say that the conversations around compute in space level, we are already seeing, quite a bunch of emerging startups trying to really address the issue of, if you can get compute to space, which is where the launchers will help, then what does it take to build real compute in space? So those would be the 3, so-called next areas or next frontier.
It's a long list, Ming Chen.
I need more than 100.
I answered the question on the portfolio construction, but I can answer the question in a little bit different way. So I think in the private markets, the bright spot for us is 3 things. One is buyouts, as I mentioned. One is secondary. Another is infra. So these 3 strategy within private markets globally.
All right, we're going to leave that panel there as, of course, we look ahead to David's panels coming up with PAG, but certainly there's going to be a lot of talk about what's going on, not just in private markets, but really what has been booming in terms of Hong Kong is its IPO market, and really had some interesting takes from Paul Chan, the financial secretary, during my panel about what our sources have been telling us with Hong Kong and Chinese investors barred from taking and being part of this SpaceX IPO later on this week. So, according to Paul Chan, this is quite detrimental. He says to U.S. interests as well, given the fact that there are very interesting companies, even in the Shanghai and Shenzhen, that are very in terms of high-tech, critical technology that are going to be listed as well. So there's a lot to talk about there with Paul Chan, not just when it comes to the outlook of the economy, which he still thinks remains strong here, but also when it comes to these cross-border curbs and what it really could mean for the financial services industry in Hong Kong. But the key takeaway was that they do have to, in some ways, attempt to inspire confidence once again to the mainland. I'm going to bring you back to a stage there. There you go. Our very own David Ingles is about to speak with PAG's CEO and co-founder, Chris Gradel, here at Bloomberg Invest Hong Kong. Let's listen in.
And how some of the editorial conversations have been curated here. So from Paul Chan, we've had pretty much a very big presence of private market allocations and conversations. We just had one with Lulu, of course, and we have, of course, Chris here from PAG, and shortly after this, Apollo is coming on as well with Eric, and I think that's a really good sort of place to start. We were just having this conversation before we came up here. In terms of how you think global investors are under-allocated to this part of the world, I wonder if you could support that with some numbers, Chris.
Yeah, I mean, I think traditionally there has been this trend. You go to the US first, and then you go to Europe, and then you do a little bit of Asia, and you still see that in the numbers where APAC is 37% of GDP, global GDP, but only 50%